Good day, guys. I hope everyone is having a lovely day. Today we're going to deal with a challenging topic called VAT, but after this it will be simple for you. Okay, first of all, what is VAT? VAT is tax levied on all transactions, basically on the supply of goods and services, right? So before we can go into the question, we need to understand what is VAT output and what is VAT input. So I used to understand it as VAT output being basically all your sales, like all your incomes will be output. Then your input will be all your deductions, like every expense that you incur would be input, except the ones that are exempt and input denied, etc. Okay, now let's read the question. Egyptian cotton sells curtains and bedding to a variety of customers. The entity was registered for VAT and the bookkeeper is still uncertain on how to account for calculations. The following must be presented for the period 1 March 2015 to 30 April 2015. So basically all amounts are inclusive of VAT. Okay. Now the required says calculate VAT payable or refundable to SARS. You can see there down below, basically here. So VAT input and output must be presented separately. Okay, as you can see that I've presented them separately. Okay, now let's start. So basically sales, when you make a sale, it has to trigger VAT output because of now you're selling goods to someone, right? So this would be VAT output. So sales, VAT output. So basically it would be 2280000 times 14 over 114. The reason I'm using 14% is because of this period from 1 March 2015 to 30 April 2015 was when the VAT was still 14% and not 15%, right? Okay. So basically 2280000 times 14 over 114 would give you an amount of 280,000. So now we're gonna deal with export sales basically. And all you need to know is that all export sales are zero rated, right? So when an item is zero rated, you don't need to pay tax on it. So therefore the amount will be zero. Then interest received, you're receiving money basically when a vendor receives money, right? So basically interest would be VAT output, and interest is always exempt as it is a financial service. So therefore it's zero. So therefore your total output VAT would be 280,000. Okay. Now let's move on to VAT input. Fuel expenses. So fuel expenses would be zero rated, and therefore when an item is zero rated, it doesn't have any VAT effect. So we move on to bank charges. Bank charges are not exempt because of it is a service being provided by the bank. Therefore, it will be standard rated. Therefore, it is 114 times 14 over 114. Therefore, it would give you an amount of 140. Tickets, yeah, the bus tickets are exempt from tax, right? So therefore, no VAT implications, right? Because of their passenger transport. Now let's move on to commercial rental expense. This one is tax deductible, therefore it has a VAT input effect. But if it was residential rental expense, then it would be exempt, therefore there would be no input effects, right? So your rental expense would be 10260 times 14 over 114. Therefore, it gives you an amount of 1260. Okay, let's move on to the next one. Your telephone and internet expenses are also standard rated. Therefore, 3990 times 14 over 114 is equals to 490. Therefore, delivery vehicle purchased. So a delivery vehicle purchased is a standard rated supply since it is not passenger vehicle, right? Therefore, it would have VAT consequences. Therefore, it is 285000 times 14 over 114. Therefore, it gives you an amount of 35,000. Therefore, inventory purchased, right? So required number 4 says 228,000 inventory was purchased from VAT vendors and 114,000 inventory was purchased from non-VAT vendors. And the definition of VAT input, it says when a vendor purchases goods or services from another vendor. So therefore, the purchase of non-vendors would be input denied, right? Okay, so the purchase from VAT vendors would be standard rated, right? Apologies for my bad handwriting. So this would give you an amount of 28,000. Then purchases from non-VAT vendors would be exempt. No, not exempt, actually, it would be input denied. So therefore, there's no need for us to do anything. And then you have to compute all the amounts and they get us to a total of 64890. And the required says calculate the VAT payable or refundable to or from SARS, right? So we have to take our amount of VAT output, which is 280,000, which we have to pay to SARS if there were no input VAT. So we have an input VAT of 64890. Then it gives us an amount of 215110. Therefore, this amount would be payable to SARS since our output exceeds our input. Therefore, it would be payable. However, if inputs were greater than our output, then it would be an amount receivable from SARS. Then, yeah. If you have any questions, you can kindly send me a message. You go.